Welcome back. You're watching Talking Point. I'm your host Puneet Zaveri. Now, we're tracking Finolex Cables right now. The company reported a decent revenue growth of roughly 14% for this particular quarter, while EBITDA on an absolute basis rose by roughly 10 to 11%. The EBITDA margins were down to by roughly 30 basis points compared to the previous year. On profitability as well, we've seen the company report decent profitability of roughly 5 to 6%. Now, do know that electricals is one of the major divisions of the company. It has seen good growth and the margins have been maintained by the 11 to 12% range. While the other divisions such as the communication cables has been a lackluster performance by the company. We've seen margins roughly just 1 to 2%, and over the last 3 to 4 years, we've not seen much of the recovery into this communication segment. So the main electrical mainstay business has been going on as well. Now, I wanted to just, start with we're talking to the management right now, Mr. Mahesh, the CFO, who's joining us right now to talk to us about the Q4 as well as the financial year 24. I'll just check if the management is here. Firstly, thank you so much, sir, for joining us today here at NDTV Profit. I wanted to start with Q4 as well as your 2024 assessment. Revenue growth has been upwards of 10%, but margins have largely remained flat around the 11% range. Could you run us through the quarter and what is your analysis on that?
Both for Q4 and for the full year, revenue growth was fairly strong. Q4, the value growth was about 15%, but underlying that value growth was also strong volume growth across various product segments. So, for example, wires, which is our largest portfolio, we grew about 15% in volume. In cables, which is not a very large product portfolio for us, we grew almost 26%. Of course, the base was low. In communication cables, other than optic fiber business, we're talking now about metal-based cables. There we grew in volume by on an average of about 14%. The fiber products did not grow primarily because the largest spender in the economy, the government, their tenders were delayed all the way until March this year. In fact, the tender is still not closed and it is expected to close only after the elections. So there has been zero business from the government in that sense. And the private telecom players also, their renewal of contracts got delayed, and those happened somewhere around February or so of this year. So other than that one product segment, all the other product segments we have shown fairly good positive growth. As far as the margins are concerned, if you recall, since February this year, commodity prices have been going up, both on the PVC side as well as on the metal side. So while we have increased prices, while we have passed on the price increase to them, there will always be a lag. I will not be able to change the price overnight. One has to establish that the change is more or less permanent before you are able to change the price. And both ways, when you have to increase the price, there is a pushback from the market. And sometimes you have to take it a little bit slow and sacrifice a little bit of margin for a while before you catch up. Eventually, the cost does get passed on, but there might be a lag, and this is probably that lag effect. So I'm not too worried about the level where the margins are at this point in time. At EBIT level of about 12.5% for the electrical cable side, we will still be among our peers. If you look at it, we will still be close to top of the heap there. So I'm not too worried about that part. Going forwards, I think the resilience of the economy, if it behaves the way it has been behaving over the last several quarters, if that continues, then I think that is a good indicator for many companies like ours. Real estate, or whether it is infrastructure build, or whether it is telecom build, any of these areas where the spend is going to happen in the coming years will definitely help us.
The other thing I wanted to ask was on commodity pricing as well as the international prices. They've been high, and we've seen that the company has been dealing with the price increase in copper. How much has the inventory levels been for the same and for the Q4 as well? Could you guide us on that?
So our policy on metals has always been this. Our ability to forecast or predict which way the metal prices will move is next to zero, because it is a movement which happens globally, and our ability to influence that is very low. So what do? We do not take long calls on the metal at all. We know what we can consume in a particular month, and that is what we buy. We don't buy anything beyond that, more than that. Secondly, as far as pricing goes, we price the metal on the month average. So, for example, if we are now talking of May, any metal that I have received in the month of May will eventually get priced to me at the May average. So that May average will be known, let's say, in 1 week's time, right? But in the meantime, I have a provisional price arrangement with my suppliers. So I pay them the provisional price. And at the end of May, when the average is discovered, if the average is more than what I have paid as provisional, they return the difference. If the average is less than what I have, sorry, is yeah, if it's the other way around, then I pay the difference. So what we do by this manner is that we are only moving with the market. We are not away from the market, and we're not taking risks which are completely different from which way the market is moving. Secondly, like I said, we try and pass on the price changes to the consumer, whichever way it is. If the price has gone up, we increase the product prices. If the price comes down, also we reduce the prices. The only difference is on the way up, there is a little more resistance. On the way down, there is a little more pull. That's the only difference. So you might have some small timing difference. The trick, therefore, is what? To keep inventories tight, while on the one side you want to be able to satisfy the needs of your customer when they want it. You also don't want too much of shortage or too much of excess. So it has to have that right balance. So if you look at our number of inventory days as the number of sale, it would be the lowest in the industry, by far the lowest. So that is something that we manage tight, and there are frequent reviews on what positions we are holding, how much material are we carrying, and how quickly can we liquidate. So that constant review helps us, and I think we talked about this in one of the calls, in one of the quarterly calls. We last year we brought in some Israeli experts to help us with planning this item. And since we have multiple SKUs, planning it on an Excel sheet becomes very difficult. So you need an algorithm which learns, which is self-learning, and which helps. So that is something that we have brought in over the last few months, and that is starting to show results. So going forward, I think that will be helpful to us.
Well, thanks so much, sir, for answering all of our questions and letting us know on that as well. But for viewers, that's all the time we have on this edition of Talking Points. Stay tuned to NDTV Profit for more.